Money is tight these days with paying bills and balancing your payments and other needs. Fortunately, there are some options.
Landon Bradfield, Vice President of Growth and Member Experience at Jordan Credit Union, back on the show to share more in the sponsored segment. And today we're talking about car loans and whether you should refinance.
Yes, refinance is one of those things that people don't think about until they kind of have to think about, or they're trying to get some room in their budgets so that they have more cash flow. But let me kind of illustrate something before we talk about some of those things and what risks are involved. So I stole this from, or borrowed from my son's toy chest this morning. If you're saying the value of a car, it's an exponential decay. So we're thinking the value is like linear, like this, but it's actually exponential decay. It's like the water slide at a like the power water slide at a big water park.
7 Peaks or something.
Yeah, so you're just like zooming down. But when you're paying off a car, the payments are more linear. And so the space in between this and this, that space right there, that's how much you're upside down in a car or that you have negative equity in your car. And so that usually happens, it's very common to happen the first couple of years of your auto loan. So when you're thinking of refinancing, you have to pay attention of how much you're upside down and what you're trying to do with that refinance.
Because the refinance can make you upside down for a longer period, right? Because you never fill in that gap.
Right. So you can actually, if you're like doing that same thing and then you elongate it again, you're like a double dip into the negative equity of your car. But if you need that space in your cash flow, that's okay, because if you're not going to be paying your other bills, you can get other fees and other things that could add up. Now, the reason why we're bringing this up now is because we've had really high rates across the board, every financial institution you've noticed, for a couple of years now. And every economist, almost every single economist is predicting that the rates are going to start going down in September.
So it's like, can we take a big sigh of relief? So instead of, say, you're cautioning people to wait, maybe now in September, once those rates fall, would be a good time?
Yeah, next month would be a great time to start looking at it. But one thing you have to look into is you have to know going into it what the rate you have now, as opposed to what the term you have. So if you have, say you got your car loan 3 years ago or 4 years ago at 1.99 or something like that. Remember those rates, like nostalgia, those rates? If you're going to refinance now, boy, you're going to have to. Up. Yeah, you could still have your everything go up.
Just because your payment may go down a little bit doesn't mean your rate's better.
Right. So you really have to pay attention. You need to know what rate you have and what term. The best way if you start to see rates go down is to match the term that you're paying right now. So if you have 3 years left on your car and you want to refinance, then you refinance for 3 years. Unless you need extra cash flow, and then you maybe can elongate it out. But you really have to know if you need that extra cash flow or not.
So when you take that cash flow out, what happens, Landon, when you go to sell? You're out that money, right?
Yeah, that's what happens is you're out that money. You're upside down, so you have to pay the difference sometimes to get from underneath that loan. Or if you switch out to another loan like at a dealership, a lot of times it's very common for people to roll that debt into the next car. So you might be able to take care of it in this transaction, but that snowballs.
Yeah, that $50 savings could turn into $100.
Yeah, bill. So.
Yeah.
Well, and so that's why you need the experts to kind of crunch those numbers. Because if you ask me what I'm paying, I can't remember. I'd have to go back. And then if you go to, say, Jordan Credit Union, they can say, okay, your $350 a month payment goes down to this if you go with this interest rate.
Yeah, for sure. We have tools that we can kind of tell you this is what you'd save in a month, this is how much interest you would save, and those types of things. So if you're interested in refinancing, feel free to reach out to Jordan Credit Union, jordancu.org, and or call one of our representatives. We can walk you through what would save you or what would potentially cost you more or what would give you more cash flow.
Okay. I love that you're actually just being so transparent, Landon, about is this the best option for you? Don't just think about saving your, X amount of dollars a month.
Yeah.
In the long term, is it going to be good for you?
Yeah, we really want to facilitate the goals of people. We don't want to get people in a situation they're not aware of they're getting into, for sure.
True.
Yeah.
Well, Landon, thank you so much. And your 6-year-old wants his car back.
Yeah, I'll make sure and bring it back, yeah.